Live streaming.
Yeah.
Well, we should. Have we tweeted it?
I can. Let's tweet it.
This is a whole other level of pressure now.
um,
You guys never doing this before?
Never.
We've always just on audio and recorded and it's edited. I mean, not massively edited, but minor edits. And we've never done like live streaming, and we haven't done video so far. So
cool. So I'm your little experiment today.
Yes.
Yeah.
So let me.
Okay. Okay. Well, we've got 0 viewers. I'll let you know if anybody comes on.
Where'd you
All
see
right,
the
so
audiences?
I'm sorry.
Where'd you see the audiences?
I can see it on the bottom of my homepage. I don't know if you can see it.
No, I can't see it actually.
No, I don't either. I think you will be.
Okay, so episode 41 in 5, 4, 3.
42.
Oh, are you sure?
Well, because aren't we releasing the? Wow, this is cool. We're releasing something else on Thursday. The Sean's London episode.
Yeah. You're right. Okay, so it is 42. All right. So episode 42 in 5, 4, 3. Hello, welcome to Epicenter Bitcoin, the show which talks about the technologies, projects, and startups driving decentralization and the global cryptocurrency revolution. My name is Sébastien Couture.
And I'm Brian Parman Crane. Today our guest is Tom Ding. He's the CEO of Koinify. Koinify is a funding platform for decentralized applications, and previously was a senior manager at eBay. Before that, he worked at Alibaba and did his own startup as well.
Hello, everyone.
Welcome, Tom.
Thanks.
Hi, Tom.
Thanks for having me.
Thanks for being on. So, for those of you listening to us right now and not watching, this is actually our first live Google Hangout. We're recording live on Hangout now. We don't have any viewers. We have one viewer, apparently, one person watching. So this is something that we've been wanting to do for a little while, and we're trying it out for the first time tonight with Tom. So we will most likely continue doing this. We're trying it out tonight, see how it works, and so far so good, because I think people can still hear us.
Just sort of off topic, I guess. Do you guys know how you can not make this video disappear when you look at other? Is there some way to like overlay the video?
What do you mean?
It's fine. It's fine, actually.
I think it'll take care of itself. The video of the person speaking is what shows up in priority.
Yeah, so I'm really excited about today's episode, and I contacted Tom after reading about his funding round, and then we can come back to that later. But it's a topic that we've come to many times, sort of from different angle. We've talked about decentralized applications many times. Whether it's Ethereum, we've had on several episodes on that. And also crowdfunding, we've had quite a few episodes on. So we've had one with Mike Hearn, we've had one with Swarm. I think we've had some more, no? We've also thought a lot about the legal implications of that. So it's really interesting to kind of talk about another project in the same area. And it's what I was especially impressed with was that you've raised money as well from kind of traditional venture capitalists. And it seems such a controversial area as well that I thought that was quite interesting. But perhaps to get started, can you give us a bit of an overview of what Koinify is?
Sure. So Koinify, in like a very simple way to put it, it would be an angel list or the fueling and funding platform to kind of bootstrap and fund the new decentralized economy. And decentralized economy, including things like decentralized applications, decentralized autonomous corporations, decentralized organizations, and etc. We're mostly focused on decentralized application, but we're trying to be the platform and kind of the champion to kind of bootstrap this new economy that we're really excited about.
So specifically, you're talking that people would develop their applications on your platform, or they would take existing applications and use your platform as a way to raise more money for development?
Yeah, so I think we're trying to achieve two fundamental goals. One is trying to get people who are not in the decentralized world kind of excited. There are a lot of great and talented developers. However, not enough people get involved in the decentralized space yet. They haven't started, spending enough time looking into what can be built in a decentralized way. I think we're kind of where we are at, probably, back in 2007 when iOS just get started. Everybody was excited, but not enough developers actually, look into it and appreciate the potential of the kind of the mobile and the similar, I would say, for decentralized economy today. So that's one of our main jobs: get more decentralized apps, high-quality apps, and help them build an economy that actually makes sense. The second part, obviously, is attracting the existing dApps developers who are already working on it and get them on our platform. The main thing we're trying to help them today is when you look at most of the funding events, I think, since last year, 2013, when Mastercoin probably did one of the first crypto sale of tokens, is there been quite a bit of interesting project going on. But by and large, most of the people do it on their own, and many of them do a lot of trials and errors. So there's a lot of mistakes that I think we could help them do a lot better and much more streamlined way, most importantly, so they can focus on their projects rather than building a crypto funding platform for their own each time some project goes on. And we're also trying to apply some of the really good best practices that kind of help me to do that. And we can talk more in the next part.
So just briefly, and maybe this is jumping ahead a little bit, but I know you've chosen a counterparty as a sort of your base layer to build on top of. Does that mean that projects that raise money through you guys also have to build on counterparty, or could they also do something different and just raise the money on that platform?
Sure. So I mean, we as a platform are largely, philosophically platform agnostic. We did start with counterparty platform because a couple of good reasons. I think one, first of all, when you look for a platform, you look for technology being advanced. I think counterparty is definitely one of the most implemented and well-developed platforms so far today. Ethereum is a little bit far away, counterparty has some good wallets, betting, potentially smart contract in the future, etc. And then plus, there's also good reputation within the community. So when you look at the other platform, I think counterparty has one of the strongest reputations. And also there's some liquidity there as well. A number of exchanges are having counterparty as a potential token for exchange against BTC. So these are some of the criteria that we look for. And counterparty, I really like the team as well. I think they have a very, very solid team and a very long-term view of this ecosystem. Did that answer your question?
Yeah, absolutely. No, and so I guess in the future that means you would perhaps, if a project on Ethereum wants to raise money, you would also offer your services on that platform, maybe in a similar way that today a company would build an Android app and an iOS app.
Yeah, we'd be happy to look into other platforms, once there's enough demand built into it. The other thing, when some of the projects actually have their own blockchain. So the way we use, for example, counterparty is most likely going to be a proxy token before they actually have an actual blockchain of their own. So in that sense, it really doesn't matter that much as in which platform we really use.
Okay.
Now, could you go into some of the core components of Koinify?
Sure. So we have a couple of things. Look at the whole funding cycle. One, obviously, is the token sale platform, which actually basically a very nice UI that allows you to kind of the end-user feel that gives you an overview of what the project is about, why is it worth backing, the people behind it, et cetera, et cetera. and then a very easy way to actually put your Bitcoin and potentially fiat dollar in the future that you can directly back the projects. So that's number one. The second part is, once you buy the tokens, obviously you will want a tool to manage all of your kind of portfolio of tokens and see how they're, reaching their goals and etc. So we have a wallet component. That's the second part. The third part is also we're trying to partner with our partners to have a number of exchanges that can have these tokens, so they have enough liquidity on market depths. I think these would be three parts that's kind of the core component to that. Underlying that, we're also trying to build a kind of smart contract that allows the governance of these projects to happen. So when people back these projects, they can have enough trust that the developers and the people being funded are actually delivering what they promise, and that's the smart contract part of the company.
And so what are some of the tools that you'll be building in order to bring that, you mentioned a while ago, the kind of ease of use, user experience aspect of all this that needs to be developed. And so what are some of the tools that you're bringing to the creators of these projects and people that are investing in these projects?
Sure. I think I should mention two parts. One, on the product side, I think we're pretty confident that we have probably one of the best, most intuitive UIs, very simple, easy to use for people who are not even very well versed in the crypto space. And also the format that we present them is also extremely kind of intuitive. The second part, I think, is a lot of the work that we're doing behind the scene. That is not just on the product side and website, but also the way how we select really good, high-quality projects and also hand-holding them on what exactly, how to build a DApp. Like many of the developers, when they come to the scene, this is probably their first or second DApp they ever built. They might be really good on the technical side, but they may not design the DApp in a way that has an actual business model behind it, or a very solid business model. You could have a wonderful project, but still has a token economy that doesn't make sense, which makes it less investable from a backer's perspective. So I think that's the other part we're trying to help them as well.
So, in sort of structuring the whole economic underlying incentives to make sure that they align both from sort of an investor perspective, a founder's perspective, I guess your perspective as a platform, and later a user's perspective, right?
Totally, exactly.
Which, of course, is a very tricky thing to do, especially because it's also something you have to get right once, right? You have to get right in the beginning because very likely you won't be able to change it later.
Exactly. And we have seen quite a bit, screw-ups in this space. So we really want to help people in that area. We're not trying to be raising as much money as possible, but we're trying to establish a fair valuation of each token. Say, if this project reach X amount of users, X amount of adoption, what is the fair value of this token? What is a good distribution mechanism that will make it, not like a scam? Analogy to that would be, Facebook, for example, IPO. Facebook is a wonderful company in terms of revenue and profits, but the way they overprice it at the IPO time just make it bad investment, and actually, have a really kind of bitter feel to the investor who invested early in the Facebook IPO. So I think that's the thing that we're trying to help them figure out.
Now you just mentioned briefly some of the screw-ups that we've seen in this space. What are some of the things that you've learned from looking at other projects that you want to differentiate yourself from, either from an ethical point of view or simply from a functional point of view? Sure.
Happy to mention a few features that I think are fairly, considered kind of pioneering this space. One is, the first thing that you notice is, many of the projects, especially kind of scam coins, they raise a lot of money and they're really not delivering anything that is differentiated or based on a roadmap. So the first feature we're trying to deliver is multi-sig Bitcoins. So when a Bitcoin come in, Koinify doesn't hold a Bitcoin. Neither the developer holds a loan. So we actually want a 2 out of 3 at least multi-sig wallet where Koinify has a key, co-sign it, developer has to co-sign it, and then potentially a third-party security company or a community representative actually hold one of the keys. The developers are going to give us a roadmap that they promise the community and tell, hey, we have 3 different milestones. If we reach, a proof of concept number 1, then we would be able to get 20%, and that's all transparent and completely transparent upfront to the backers. The backer will see that. Upon that point, Koinify is going to consign, okay, so you guys delivered what you have promised to deliver. We're going to release the rest of the money, the 20% of money, and then the same for the next cycle. So that's the first thing we're trying to do, the multi-sig kind of Bitcoin. wallet.
So that's you're gonna get yourself in you're putting yourself in a very contested position there. I can imagine that a lot of controversies will arise
Sure.
around decisions like that.
Sure, absolutely. I mean, we definitely hear pushbacks from project developers, and I think we would rather be more selective and work with people who want to be kind of more trustworthy and in the thinking more long term. Yeah, definitely. But I think this is something that this community really, really needs is a trust and kind of aligned incentive that we're trying to build, kind of radical transparency. The second part we're trying to build is the kind of the auditing. Like, where does the money actually go, right? So in a traditional startup, you have board of directors, you have all that to kind of monitor and third-party auditors. We're also trying to bring some of the mechanisms that actually make sense to kind of help the developers and help the community understand where the money are they going to the right places. So that will bring a new layer of kind of transparency into it. Yeah. And the third part is what I just mentioned about is the economic valuation. Like one thing kind of really surprises me, astonished me, is in this community, whenever people do crowd sale, no one ever talks about what is the crowd sale or the token actually worth. No one evaluates. People just think about, hey, I need a $10 million. Why don't we just raise $50 million? Let's see where it goes, right? Instead of talking about is that a fair valuation. Obviously, evaluating a DApp is hard. I don't think it's any easier than evaluating a startup, which is hard too. But at least we want to provide a number of scenarios. Okay, scenario number one, if this project hits 1 million users and get X amount of transaction per day, then this token probably is worth somewhere between $1 and $2, right? And we can provide a number of these scenarios and help that out. We might be one of these guys doing the analysis. We might invite more independent due diligence or economists to do the evaluation as well. So that, I think, will definitely help provide more guidance for the people who want to back these projects.
Yeah, no, I totally agree with that. I mean, one project that I've been sort of following along very closely is Swarm, because they gave a talk here. We've had them on the podcast. I know those guys, and I think they've done a great job in some ways. But one thing that I find kind of striking is that it was never very clear, like how exactly is it, like how many coins would be created, what's that distribution. It was just like
Exactly.
we want to raise that money now. And then later they came around. It's like, oh, actually it works like that. And there's really a complete lack of understanding, I think, of what people were doing.
It's so like in the South Park, one of the episodes, right? It's crowd sale, step number 1, step 3, profits, right? No one talks about imagery. So.
So I saw somewhere it was mentioned. I'm not sure where I got that quote, but I saw you mentioning somewhere kind of the contrast between traditional startup funding versus this type of funding, and that one advantage is removing the trust. I guess that's kind of what you alluded to as well, with the possibility audit to release funds gradually.
Yep.
Do you think we will see kind of broadly move startup funding in that direction?
So first of all, I think what we're trying to do, we're not doing equity funding, right? We're trying to fund decentralized applications. Now, the interesting thing is decentralized application kind of blur the line between an application and a startup or a corporation in general. Some of the applications are so powerful by themselves when they combine with a peer-to-peer user model, or you can consider them hiring these employees like in miners at the Bitcoin sense. They essentially replace a traditional large corporation, like Bitcoin replacing Visa to some extent. So I think there's some blurred line there. So I wouldn't necessarily think that funding decentralized application will replace all startups. In my view, I think there will be two general directions. One is you would see a number of corporations, especially those commoditized, slow innovation ones, are going to be replaced or obsolete by the decentralized applications. On the other hand, you will continue to see a lot of very exciting robotics, 3D printing, these kind of startups will continue to innovate, and that will primarily be a human-driven organization. It will not be replaced by lines of code, I don't think any soon. But these companies could definitely benefit from a lot of the improvement in smart contract technology, such that when they structure a company, they could, much more easier to fundraise, and they could have a more distributed team, and the smart contract will help them to govern the team. That's kind of where I see the two different directions. And we obviously are more focused on the first camp, but I definitely see the technology benefit on the second camp as well.
So then, what are some of those types of companies, like you mentioned, that will become obsolete through the development of decentralized applications and decentralized autonomous corporations? And so, what are some of the obvious new applications that can benefit from DApps?
Sure, great question. So right now, obviously, I think we're trying to look at a case-by-case basis. But the pattern that we kind of observed a little bit is a few things. Number one is commoditization. So when you look at companies, there are all companies who have a very high innovation rate. They keep evolving their business model. They keep updating their product. And there are the other companies who are like 100 years old or not quite innovating. And you have a very complicated management structure. So I think these companies, a couple of examples like insurance, retail banking, all these kind of companies are not really doing tons of business innovations. And the thing that happened with these companies is that you end up, I had quite a bit of experience working with corporates. So my general observation is sometimes people justify their job by creating something to do. So you will always find something to do for the CEO, for the CFO, for CXO, but the management overhead doesn't really create tons of value. These kind of companies, I think, are perfect targets for being disrupted. That's one, I think, dimension to look at it.
So we're talking about insurance, we're talking about banking, we're talking about remittance, we're talking about a whole slew of sectors that can be completely disrupted.
Absolutely. Or just easier. Now, any industry that is more than 50 years old, 100 years old, right? These companies, limited innovation, incremental innovations, and they can very easily be replaced by employees in adapt. Number two criteria is verifiable. So I think it's important that right now the crypto technology is still largely limited to things that can easily cryptographically verifiable. Mining is a perfect example. It's the most verifiable thing. You can easily evaluate, is that a good job, is that a bad job? Obviously, you can introduce some of the third-party evaluators, like an insurance example. You most likely will have to introduce some humans to evaluate whether that accident really happening or that it claimed. But the more complexity in the evaluation part, the harder, I think, to decentralize them. So I think that's one of the limitations or the criteria that you look for. That's why I think people all started decentralized application with the computing resources. Storage, computing power, network, bandwidth, all of them are very easily quantifiable and verifiable. So I think the second criteria we'd look to. The third criteria, and by the way, in that, these two criteria, I think one interesting big category, broad category of things that can be decentralized is information commodity. Anything that is related to information commodity middlemen, like Craigslist, forums, all of these websites primarily just being an intermediate layer between buyer and seller or between multiple parties are fairly easy and simple business model. And many of them, I would say, have a good chance of being, decentralized, or at least it would have some strong competitors in the decentralized world competing with them.
I agree, but I think that one of the components within that, so you mentioned information, so say we have a model where we can decentralize forms, for instance. I think one of the sort of components that perhaps we haven't figured out yet, and maybe it has yet to be developed, is what is the platform? So now we have the internet that's reliant on centralized servers and such. Does that platform move into some sort of a protocol that has an app which pulls that information and displays it to the user? There's still that user interface, I guess, component and delivery method that really hasn't quite been, I think, explored very much yet.
So you're talking about a limitation of having to have a desktop client in order to be completely decentralized?
Yeah, I mean, because we talk about decentralized applications, but still the internet and websites, for instance, still rely on centralized servers. So where does that delivery mechanism come from then?
Sure, that's a great question. My personal view is obviously I think since like MaidSafe and Ethereum are trying to decentralize the whole internet, that will make the whole decentralized a lot easiasier. But when you look at
that's a big challenge. I mean, the decentralized whole internet with 25 years of infrastructure and protocols and such, that's a big challenge.
Sure. I think the decentralization is really a long spectrum. From the current model of like mostly highly centralized all the way to completely peer-to-peer node-based decentralization. I think there's quite a bit of area in between. You could start with something, for example, Counterparty itself is run on a number of federated nodes, right? So I don't think necessarily that we have to go all the other extreme to claim victory. I think something in between could be good enough for now. You could have multiple people who are hosting their own web servers, running a different copy of whatever thing that can be decentralized. So that's kind of my view. But obviously, the ultimate kind of holy grail is to completely decentralize.
Decentralize all the things.
Yeah. But I don't necessarily, by the way, my other thoughts, thinking from a different perspective is, I don't necessarily think that everything kind of makes economic sense or efficient sense to decentralize everything. I think there's a large category of that, and we're just a tiny fraction of that yet. But it doesn't necessarily mean everything still needs to be decentralized.
Okay.
So there's one issue I've been thinking about quite a few times when talking about these topics over the past months, 6 months or so, and I think it's something you've also mentioned in a blog post you've written, and that's the whole question of like where do the profits go in this model? Because it seems today startups that are successful, they tend to try to build monopolies, right? So if we look at Google or Apple or Facebook or LinkedIn or Airbnb,
Right.
they all try to build a strong monopoly, strong lock-in effect, a strong brand, so that they can charge a premium. Now it seems where's the place for that in a decentralized world?
Yeah, I think it's super important for a DAC. Well, I think, a different category of DACs. There are some DACs that you could potentially treat them as a public utility, like a gas company, a water company. These kind of companies doesn't necessarily have to get huge profits. All you need is essentially the base capital to compensate the people who initially develop it. And over time, it may or may not need tons of maintenance or development costs. Then you have the category of decentralized application, where actually it does require a fairly significant continuous maintenance. With these projects, I think like the BitShares model, personally, I think that's maybe a good example. You actually take a transaction fee out of every transaction you made, you burn them, which is essentially equivalent to paying dividends to all the kind of shareholders or coin holders. I think there's some good examples out there.
So can you explain why does a DApp, decentralized application model, why do you need to have recurring profits in that case?
Yeah, so it depends, right?
What distinguishes that from the kind of the public utility thing?
Sure. I mean, there are also other DACs that may not even decided not to take any profits because someone could have maybe coded the apps on their free time and they're happy not to take any profits. You don't need a huge team for ongoing maintenance and development. I think that's totally fine if you want to make it profit-free. So basically, it essentially becomes a public utility in a broad sense, in a software sense. Then you have the type of project who actually does need, like Ethereum. Ethereum is a good example, right? It's a very ambitious project. It needs many years of development, phases of development. So I think kind of makes sense that you would need to build into some mechanism to either raise fund, such that these tokens actually has economic value, or you build it into the fee system, such that every transaction, when executed, takes a certain percent of profits, and then that will benefit back to the people who are holding the tokens. So I think it really depends on the cases.
And do you think in the case of Ethereum, I guess one issue that comes up a lot, but I think it's applicable very general in these cases is, you could just fork the projects, cut out the money supply, and in that case, if it's an open source project, there's really nothing they can do. It seems the only protection against that is the sort of network effects, right? Because they're the first ones, the biggest ones, and maybe that protects them.
Sure.
Do you think that is the general dynamic of how it's going to play out, so that basically the only thing protecting those decentralized applications are going to be network effects? And I guess in cases where those don't exist, you won't be able to run these kind of models?
I think it will primarily be a combination of network effects you mentioned, plus the team itself, right? Because people ultimately look at this project and see how likely Ethereum is going to deliver what they promise, or how exciting it will be in the next 2 or 3 years. Consider that whether a worthwhile investment either into this ecosystem, if I'm building an application on top of Ethereum, or if I'm investing into the Ethereum tokens. I think of a combination of these two factors. And I don't see that fundamentally being different from the startup world, especially, I think ultimately, competing for capital. Like Ethereum guys raised, $50 million. That's a good bootstrap. You can't, have another project easily raise that amount of capital to dedicate to that development, right? It's hard to replicate that kind of capital. So.
True.
So perhaps moving on to the types of projects that that you see developing on Koinify. Are there any projects that are under development already today on your platform?
Yes, so we're talking obviously to a number of DApps. We can't talk too much about that yet right now, but you should see that pretty soon. And we're definitely looking for more interesting kind of DApps in the space. We're also trying to do a lot of evangelization work to help more developers to get into this space, including potentially running our own kind of DAC university program that actually is starting to have a courses of kind of educating talent developers how can you decentralize your projects and thinking from a different perspective. One challenge I think with the DAC is it's not like you just learn a new language, Objective-C or Swift, and you start a program the next day. I think educating DAC really requires a shift in thinking. That what can I not? You have to stop thinking about building that application as a company, as a profit center, but instead, moving towards a very decentralized model, which might be requiring token economy.
So you guys aren't LifeFit, right? So
we're not. So, but we will be pretty soon, hopefully, with our first project.
So do you know the launch date already, or what's your timeline?
It's about roughly, I would say, a month from now.
Okay.
Okay, great.
Yeah. Yes.
And so perhaps we could touch on the legality of this, because it has been brought up a few times on this show and off air as well. The legality of issuing equity in the form of decentralized tokens. What's your strategy regarding the legality of these crowd sales?
Sure. We have always been trying to be extremely transparent and very professional in the way that we do that. So we spend tons of time, working with top law firms in the space. Actually, a significant part of our cost, is on the legal cost. I think my personal view on this is I think we try to focus on decentralized applications. We don't want to touch anything that is to do with equity, crypto equity, however you want to call it. I think we would rather see Jobs Act and these coming, and AngelList and the traditional companies I think are better in doing that. I think the power of Bitcoin blockchain, what it really enables is the DAC. I think that's much more exciting. So I'm not too worried about legality of that in that sense.
But where do you think?
But
where do you think this is going to go? Because I mean, this year we've seen quite a few regulatory bodies in North America and in Europe start addressing the topic of Bitcoin regulation from the monetary side, from the currency side.
Right.
And
right.
I think we can all expect that within the next year or so, those same regulatory bodies and governments are going to start tackling crypto equity and the sale of securities. Do you fear that your model may be subject to the type of harsh regulation that we've seen proposed, and for instance, the bit license proposal in New York and others that we've seen draft proposals for?
Yeah, I mean, the current most of the discussion on a regulatory side is primarily about money transmission. And I don't think that's primarily an issue for us, given we're primarily talking about token. And then my view on the token, the nature of the token has always been, it's first and foremost, it's a software token. It's a software license that you're selling. However, what you haven't dealt with before, I think the gray area comes with the fact that if you look at Kickstarter, tons of projects on Kickstarter, no one had a real question about Kickstarter, primarily because Kickstarter's products on Kickstarter is a depreciated assets. Now you're talking about software token that may potentially appreciate in value or depreciate in value, but I think that's a larger gray area. But in terms of its nature, we still believe it's primarily software token, and this is something that our law firm are pretty comfortable with as well. So I'm not too worried about that.
So I guess, is this kind of a similar position to the one that Ethereum took in sort of declaring it a product instead of a product? So I mean, I think it's great that this worked out with Ethereum that way. I'm just really curious in how many countries and how many places they would have been able to get this through. Because I think it's at least sort of open to interpretation. Is it either really a product or is it more like a security? Now, of course, it has characteristics of both, and in terms of a tax regulation perspective, of course, for Ethereum, it's much better if it's a product because then they can do a lot of things. But I personally have quite some doubts that this will really be replicable in many instances, and I could very much see that, especially once these tokens become traded on exchanges, that then perhaps in the future people will say, well, perhaps this is more like a security. Do you see that data too, or did you?
I see a little bit differently. I mean, the fact that you can trade them easily just means that you have a more liquid market. The fact that you can trade any electronics gadgets on Craigslist doesn't make them any more like security, right? So I don't see, or you can trade your licensed copy of Windows or Mac, on Craigslist doesn't really make them the security. I think the fact that security is primarily tied to the ownership in a corporation, and they're not even a corporation per se in the decentralized application world.
Yeah.
So I just don't see that being as very strong.
So something that when I was kind of reading about Koinify beforehand, it struck me, thought was quite interesting. So your co-founder was the CEO of Blueseed before, correct?
Yep.
And so Blueseed, for those who don't know, and then you can correct me if I'm wrong, but the project was basically to put a ship or sort of a ship island in front of Silicon Valley where people could live on, build startups on, and that would be an international border, so not subject to U.S. jurisdiction. So I guess from a regulatory perspective, you could do a lot more things, and also you wouldn't have to get a U.S. visa. So it's kind of a very libertarian a project. Got a lot of stir. I don't know if it's going anywhere or not. But I think it's quite interesting also from the perspective of Koinify, because it seems to me, and perhaps you're right, and this is not going to be the case, but it seems to me likely that many of these innovations will be pushed abroad, and people will have to perhaps go to places like that to do controversial projects in this decentralized space. It's just I thought it was an interesting connection, and
Sure.
I guess at least
I'm glad you picked up this connection, because I think the fact that Dario and I were very philosophically connected, aligned, is the fact that we're really using different technologies to solve really the similar problems. Dario Blueseed was all about building a ship that enables innovation more freely, a permissionless innovation. I think what Koinify is trying to do is using crypto technology instead of physical, the atom technology, to build something that allows people to more freely innovate, a place where more freely competing. So yeah, I think it's very similar line goals philosophically.
And of course, it may actually be that in the end you will need both to make it happen, and that you actually need to physical offices to those places like that.
We hopefully won't get to that space. I hope the regulators won't go that extreme. But yeah, I think there's an interesting connection there.
Okay.
I think as the saying goes, we should just go to the moon.
Yeah.
Yeah, we've been saying it all along. We just need to go to the moon, and nobody will bother us up there. So where's that project? Is that project still being developed, or is it kind of fallen through?
You mean Koinify as a platform?
No, Blueseed.
Blueseed.
Yeah. Oh, the Blueseed. Okay. So I think the Blueseed was having some funding challenges. It was a wonderful, very exciting project, but I think it has some major funding challenges.
Okay.
The initial amount of funding is pretty significant.
Yeah.
Yeah.
Yeah, it's an expensive ship to build.
Yes. Absolutely. That's something the easier about software. So much easier. That you don't need that kind of a large, you can't do like a minimum viable product for a ship, unfortunately. The minimum is $30-40 million.
Yeah. So talking about fundraising, can you talk to us a bit about through your experiences, as an entrepreneur, raising money for a project like that, that I think is very much sort of at the edge of what people are doing in this space?
Sure, absolutely. I mean, this is like our second round of funding, $1 million, from IDG, Z Park, Brock's and his Angular syndicates, and another Chinese fund. So I think the majority, kind of my takeaway is people are really excited, and that's something I'm really happy about. And I did spend a lot of time actually educating these investors about what is DApp, why it's exciting, why do people need this kind of platform, and what kind of innovation does it bring. And I am really glad that these investors are super supportive. Brock obviously has been an early investor in a number of DApp projects already, so I think that definitely helps. And the IDG has also been an early investor in Coinbase, so they definitely have this knowledge base of what this whole kind of crypto ecosystem is about. The other kind of validation that I'm kind of excited about is currently when you look at most of the projects at the crowd sale, they're primarily about selling to crypto enthusiasts who have a belief in the system. But I think over time we will see a shift or a balance towards a combination of individual kind of backers who like the project and kind of the hobbyists, but also these kind of more institutional or traditional venture investors in these crypto assets. And I think that's a really important development that kind of enlarges the ecosystem. Bitcoin overall is only about $7 or $8 billion ecosystem. When you talk about active capital, it's probably $1 or $2 billion. And Ethereum by itself already attracted $50 million. I don't know how many more active capital can have the interest appetite for these newer projects. So it's important that we kind of get more of the connecting, bridging the older world, the legacy world, and the crypto ecosystem.
What you just mentioned there is interesting because these technologies really enable for that type of crypto investor profile to emerge. Because investing in companies so far has been quite. It's not as easy. Who do you think this crypto who's your typical crypto investor? Is it somebody who's invested in tech, or could it be like just about anybody? I think that we're kind of opening the doors to a whole bunch of investment from people who have nothing to do with cryptocurrency companies or tech companies, where just about anybody could just walk in and start investing in any kind of business. So, what are your thoughts on that?
Sure. I think, yeah. So I think it'll be a fairly different scene or profile mix of the investor group. Traditionally, startup, you have different stage of funds. You have seed investor, ABC rounds, based on their fund size. Now I think you will see probably a mixture, and hopefully a healthy mixture of those individual kind of backers who are either excited about the project and technology themselves, or it could be people who potentially looking for some kind of return or want that project to happen. And then you also have people who are playing kind of the lead investor role as an institution, who is either doing it as stick investment or looking for certain returns. So I think you will probably see a healthy balance of those, and that's what we're trying to bring as well as value added.
Yeah, we've touched on this topic too before with a few people. I know with Parmi Galimbi and also with Bastian. I touched on that, and that's the sort of limitations I think that venture capitalists have in general. Correct me if I'm wrong, but from my understanding, most venture capitalists wouldn't actually be allowed to buy some kind of crypto share asset or something like that. So do you think we will see funds in the near future, I guess, raising perhaps new funds with different terms if they're limited partners that would actually allow them to do this kind of activity?
Yeah, sure. So we definitely noticed that certain funds, actually most of the traditional venture funds has a limited partner agreement that doesn't allow them to invest in non-equity assets. And I think at this stage, DAPPs would not be considered as equity. So yes, and that's one of the problems that we're actually working on. There are a couple, I think one or two funds at least I don't know. A decent DAPPs fund itself by David Johnston. I think they are actually a fund that's dedicated to crypto assets. And I think you'll definitely see an emergence of more of these kind of funds happening. On the other end, there may also be a way to bridge the two worlds. Where you can potentially build certain kind of a bridge layer bridging the traditional fund structure into this new ecosystem.
Oh, that's interesting, right? So I guess you could have potentially venture capital firms investing into the equity of a startup that then buys some of those assets. So perhaps that would be a sort of circumvent way of achieving that.
Yep, potentially. I mean, if you look at Ripple, I would say, that part of the value of, Andreessen Horowitz investing in Ripple is probably for the Ripple of the currency, right? I mean, Ripple holds a large amount of XRP, so you're absolutely right on that.
Now, perhaps we could take these last few minutes of the show to just kind of, think about the future. I like to think about this kind of singularity stuff. And you wrote this blog post on the Koinify blog, 2020, a call for DAPPs and DAOs. Could you just briefly summarize the article, and then maybe after we could kind of start thinking kind of like pie in the sky stuff and where this is kind of all going in the future?
Sure, absolutely. I mean, this article is partially inspired by Y Combinator's recent article, A Request for Startups, right? So they listed a number of exciting spaces that they would like to see to apply to YC, anywhere from energy, financial services, green infrastructure, etc. I think that's the kind of thing, in crypto space, I don't think we have a lack of technology. That's a part of the thing people work very hard on, but we have really a lack of good use cases. And that's something we're trying to help out with the community and also seeking feedback from the community. What are the legitimate use cases that we would like to see? So the 2020 kind of thought experiment is, 5 years from now, not too far away, is, if you have a peek into the future, what kind of decentralized application do you think will become part of our life, but you don't have it today? So let's start from there. So the first part, I was trying to list out a number of criteria. We cover some of them. What is the guideline? What are the guiding principles? The thing that actually makes sense to be decentralized, such that they will be more economically efficient, such that there will be less, monopoly, etc. So there's a couple of things: commoditization, low profit, etc. The second part actually started with a list of things that we have observed or people we have talked to that kind of give us feedback. A couple of areas, anywhere from financial systems to kind of storage of private data. For example, your smartphone contact and these kind of stuff. And then you have these information commodity marketplaces. So a number of areas that we are trying to find legitimate use cases for.
So what's the one you're most excited about?
To be very honest with you, I think all of these are pretty exciting, but I haven't found really the kind of killer use cases that people would call it yet. So I'd love to hear feedback from this audience, or anyone who's interested to talk more. And we're very excited to help you fund that, design the right DApp for it.
It seems like one of those use cases that has gotten a lot of projects in the area is the sort of decentralized file storage.
Yeah, exactly.
Why do you think that is?
Well, I think the fact that I think it met one of the 2 or 3 criteria that I mentioned about. It's commoditized to some extent. I mean, hard drive space is super commoditized. Number 2, it's super verifiable. Every gigabytes of space, you could verify very easily whether someone retrieved that, provide the space, and able to retrieve the file from it. And also, it also potentially approaches, I think, kind of the Airbnb model. When you actually look at, interestingly, so when you look at economically, the economics of a decentralized storage space may or may not actually be more expensive than a centralized server farm, right? Because when you buy, you have a large economy scale. But the good thing about that, the other way to think about that, it's an Airbnb model, that you're actually, utilizing the existing spaces that are kind of wasted anyway. So I think there are a number of criteria that it hits, and kind of excited about people. But and along that line, you could have storage, you have computing power, which you could do a number of things with it, like 3D rendering or supercomputing, or like big data, Hadoop jobs, a number of these things that you could do along with that. And these are the things that I expect to see very, very soon, within this year or next year, to kind of get started. And then you move on to things that are kind of less cryptographically verifiable. Potentially like transportations, Ubers, and these kind of stuff that are less verifiable, or insurances, and more complicated too. But it will take a while, I think.
Yeah, absolutely. I think we're sort of at the very beginning of a very long journey now.
Yeah, absolutely. One actually, I would probably name one my favorite among this list at least. is I think it's a decentralized health insurance. I mean, today we already have betting system, simple betting system on counterparty, and insurance is essentially a probability game as well. It's a much more complicated, obviously. You have risk profiling kind of things, but I think it's kind of thing that really could disrupt the current kind of insurance system, especially in the U.S. The medical healthcare bills are just enormous and just doesn't make a lot of sense for someone who's not doing tons of good job to take a huge profit out of each insurance. All the insurance company doing is pulling money in and then redistributing these money back to you, and they take a huge cut out of it. I just don't think that kind of thing is necessary in the long term.
So perhaps very briefly, can you explain how do you think a decentralized health insurance would do a better job at that? It seems like I have difficulties picturing that, to be honest.
Sure.
Just what it would look like, even.
Sure, I haven't given very deep thought into it, but briefly, you could basically, the first thing you start with adapt is look at what are the roles. And when you look at insurance, it's primarily people who are providing the capital, who are also the same one being actually insured. So you have the payout process, which says, there are a number of events that we're going to pay you out. And then you have the people who are actually doing the kind of evaluation of what is the risk profile of this certain use case of different events, an earthquake insurance, for example, or a healthcare insurance, which says based on your healthcare profile, health history, what is the probability of that? And then when you connect that, for example, to something like 23andMe, a DNA database, which indicates what's your probability of having that disease, and therefore your insurance premium is X, right? So now you start having a pool of funds, you have a probability database, and then all your people doing it in a very simplistic way is people putting in Bitcoin. And therefore, when you build a large enough, you may have a critical mass, a pool, such that your risk is significantly diversified. Once you reach that point, your DAC probably potentially gets started running. And when certain events happens, there could be a validator, a claim agent that actually, independently or a combination of claim agents in the network would evaluate, is that a real event, what exactly happens, what should be the payout be, and then redistribute these funds. So.
Cool.
But it's an interesting thought experiment.
Yeah, absolutely. I'm sure it's the sort of thing that is really interesting and really, really hard to do. And of course, it gets into another area where you'll be battling with an insane amount of regulatory.
Oh yeah, definitely. But that's why it's exciting.
But if you wanna maximize your sort of confrontational encounters with the regulators, then this is the area to go, because you won't only have like money transmission and
yes,
perhaps unlicensed sale of securities, but also health insurance.
We're going to fight 5 regulation bodies at the same time.
Yeah.
Speaking of which, are you incorporating only in the U.S. or do you have offices elsewhere?
So far, we're only in the U.S., but we're looking into offshore as well.
Okay.
Cool. Is there something else you want to cover before we end the show?
I think that's a really good conversation. We are super excited about kind of bringing this new layer of radical transparency and kind of some of the professionalism into the space, and trust, I guess, mostly. I think this crypto space is a very exciting space, but unfortunately in the last few years, I think we have significant amount of trust debt, I would say, that kind of accumulated for a while. A lot of things, good things, are just not being done in a very professional, transparent layer. So we're trying to build that kind of transparency, and we're trying to have a really good user experience, fantastic user experience, and also bringing the liquidity and capital from a little bit from the legacy world into the system. So we're hopefully really trying to kind of ignite this new economy of decentralized applications.
And if people want to exactly learn about Koinify,
if I may add, one more thing, is
sure.
I think one of the really exciting features where we're kind of really passionate about is imagine 20, 30 years from now, or even shorter time, 15 years from now, that people will no longer treat a full-time job as something that you are supposed to be doing. Today, almost everyone expected to have some kind of full-time job, but in the future, you could be just freely associated with a number of DACs. In the morning, you might be working driving a few hours for a decentralized Uber. In the afternoon, you could be coding for a while, contributing to an Ethereum project, and you get paid based on smart contracts. All of us, I think, as humans, are usually gifted with a number of ways, and we have a number of interests. And having a full-time job is not necessarily the best manifestation of that kind of talent and interest. And DAC, I think, by its nature, is free association. You enter into the system as a miner, you can freely leave anytime. You compete based on your skill sets and your output. I think that's kind of the thing that I felt like DAC. A lot of people would say, hey, does DAC kill a lot of jobs? I don't think so. I think DAC kills the inefficiency in the system and move people and track people towards a more efficient and exciting jobs and the thing that they're really passionate about. I think that's kind of the things that make me excited about that. It's not a zero-sum game.
Well said.
Indeed, yes. It is crazy to think about this kind of world, right, where you just sort of freely work a bit here and get paid by some sort of non-identifiable, like non-located entity in the net that this gives you work, distributes the work output. It's fascinating.
Yep.
But yeah, so if people want to learn more about it, so first of all, important to point out, Koinify is written with a K, because there's another Koinify written with a C.
Yeah.
So that's koinify.com. So you can sign up for the newsletter there. Perhaps that's the best way to kind of be in touch when you actually go live and people can try it out. Also on Twitter, you Koinify the same thing at Koinify.
Yep. Feel free to shoot us an email at hello@koinify.com if you have any DApps ideas or anything that you want to discuss about DApps and DApps.
Cool. Well, thanks so much for joining us today. It was really great talking with you, and I'm super excited to see what's going to come out of Koinify.
Sure. Thank you for having me. Great conversation with both of you.
So thanks so much for listening. If you want to support our show, then you can do so by giving us a tip. We very much appreciate that, and you can do that at epicenterbitcoin.com/tips. You can also leave us an iTunes review. That helps people find the show, and you can let us know what we're doing well and where we can still improve. And finally, we also send out a newsletter every Friday, and that's at epicenterbitcoin.com/newsletter.
And I just want to say thank you to our one viewer.
Our one live viewer.
We have one live viewer right now. I'm not going to say his name, but he's in Los Angeles. So if you're listening, thank you.
Thank you. Yes. Did he stay on the whole time?
Well, I don't know. There was one viewer pretty much throughout the whole show. You know who you are.
Yeah. So, but
yeah, this was exciting. I really like this format, and I think we should do it again sometime. I mean, we should probably start doing it regularly.
Yeah, absolutely. So if you're listening to this in your usual way, then you probably weren't aware that we're actually now doing it in video, etc. For the first time. So I guess keep a sort of lookout on Twitter, and when we do it the next time, we'll announce beforehand that we'll do a live on video-ish episode. And I think we also have some interesting content coming out soon from Sean Jones. She did produced some content for us at the Crypto Valley conference in the Isle of Man, and also at Inside Bitcoins in London. So you can look forward to that. So, well, thanks so much, and we look forward to being back next week.
Bye.
Bye.
Bye.